So we have Newmont released their earnings this morning. I have been anticipating this for a while, so I'm very excited. A good amount of my portfolio is in Newmont. Newmont's one of the largest gold mining companies. So we're going to go through the report, talk about some stuff that I just read over the report. I want to talk about some stuff. And yeah, hopefully you guys enjoy the video. So today's October 29th. Third quarter results. They're on track to finish 2020 strong and to actually meet their full year guidance. So that's important, they're able to set a guidance and also fulfill their, goals as a company. They declared a third quarter dividend of 40 cents per share, increased 20% or 60% from the prior quarter. So now it was at 25% last quarter. Now it's at 40. That's in crazy growth. And before that, I think it was 14 cents a share. Looking at it right now, 14 cents a share. So it went from 14 to 25, now to 40. Crazy dividend growth. They also formed some venture with Kirkland Gold. I also have this miner. It's, I think they're like 4 or 5 times smaller than Newmont. But I do like this company because the low debt, high growth company. They also pay a little bit of a dividend that's growing substantially fast. So this is from the CEO, Tom Palmer. Capitalizing on the strength of our portfolio and higher gold prices, we delivered record third quarter adjusted ATPA, of 1.7 billion, free cash flow 1.3 billion. This was the best quarterly financial performance in Newmont history. That's something interesting that the CEO would say from the company. I mean, they've been around for many years, and during like a pandemic, they actually performed very well. He explains kind of why they obviously in some areas didn't do so well in the company, but for the most part they did very well. Anyway, I'm just going to read all this just because it's kind of the highlights of the entire quarterly report. Annualized dividends of $1.60 per share, the highest in the gold sector. Now I got these two asterisks. They didn't actually. They're just. This is forecasted based on the dividend they decided this quarter. So if they decide to pay out 40 cents per share every quarter, yes, they would have the highest. However, they literally said they didn't actually do that, and they might not. You never know. So kind of a bold statement, but just interesting that if they do sustain it at $1.60 per share, will be the highest in the gold sector. Announced dividend framework that maintains leading at $1 per share sustainable base dividend and provides additional returns from Newmont's significant free cash flow generation at higher gold prices. So I guess they're kind of saying that we'll keep the dividend $1 per share just as a base, no matter what happens. But if we generate more cash flow, then we will return more profits to shareholders. That's kind of typical with gold mining companies. I've noticed they, especially the royalty ones, they don't necessarily pay out a specific dividend each time because of fluctuations in the gold price. It's easier for them to say, we're going to take like 20% of our profits and give it to shareholders, something like that. Strong financial position as a world-class portfolio supports a higher dividend as we continue to progress our most sustainable projects, profitable projects. Industry-leading dividend with 2.7 exceeding median. So their actual dividend as a gold miner is kind of higher than some other companies or the median company in the S&P. During 2019-2020, we will have returned more than 2.5 billion to shareholders through dividends and share buybacks. I love to see that companies are buying back shares, especially because it kind of shows that they're cheap. Down here we can see their product summary. So one thing I want to note is their GAAP net income, actually from the prior quarter, Q3 2019, decreased substantially. We'll get kind of into that right here. But their when you adjust the net income, it actually increased about 3 times. So depending on what you want to look at, this is a GAAP measurement. I'm pretty sure this is a non-GAAP measurement. So this is more reputable. Attributed gold prices production decreased 6% to 1,541,000 ounces from the prior year, mainly due to all the pandemic operations that wanted. Attributed gold production for the third quarter 2020 includes 60,000 ounces from the company's equity method. So they just want to make sure one of these things are included in that measurement. So net income came out to 76 cents per diluted share, which was a decrease to 61 million from the 16.15 million the prior year. This is due to recognized gain of the formation of a new gold mine the prior year. Low sales volume due to, or just they kind of highlight what happened with their company and why they're performing less it's right before taxes and the net income. So I guess this isn't necessarily a GAAP measurement, but at the same time, it shows more of what a company can do as opposed to net income, which includes taxes. Revenue increased 16-17% from the prior quarter, pretty good amount, due to higher average realized gold prices and offset by lower gold volume sales. They actually sold less, but they were able to do it at a higher profit. This is important to look at because we need to get an estimate of what they were selling their prices of commodities at. Average realized price for gold, again, non-GAAP measurement, but it's fine because this wouldn't make sense to be a GAAP measurement. Average gold was $19.13, copper about $3, silver was $21.69, and lead was 73 cents per pound. Their capital expenditures, not a GAAP measurement, again decreased 31%. They sold Red Lake and Calgary, and reduced spending from the completion of bordered underground outfall mines and other. So they kind of just sold off some stuff. Consolidating operating cash flow, continued operations increased 101% from the prior year due to higher realized gold prices. So they're able to generate 100% more cash flow in 1 year. That's crazy. Let's go down to the outlook. Newmont's 2020 attributed gold production is unchanged at approximately 6 million ounces, and the company expects to produce approximately 1 million gold equivalent ounces from co-products. The company continues to progress the majority of its development and sustainable capital projects. Approximately 80% of the company's exploration budget is allocated to near mine activities. Newmont's 2020 outlook assumes operations continue throughout the remainder of the year without major pandemic-related interruptions. So as long as they're kind of keeping on pace, they're doing what they're doing, gold is at the sustainable prices, these companies will be able to produce so much more cash and more money. And that just makes sense, and I think they will, just based on economic activities and investment mindsets around uncertainty in the economy. Here's a cool chart. I like this because the average realized price, you can see over 2019, their average realized gold price was $14.76. Now it's about $500 more expensive, roughly 30% increase. I guess better look at it. The only one that went down is gold or lead, but again, they're mainly a gold and silver miner. So again, we can even look at 3-month change. 3-month change in the price of gold, 27%. Copper's about 4%. Silver actually didn't increase too much, but in comparison to the 3 months, the last quarter, there's a huge increase in price of silver. Again, 26%. They're able to sell it that much higher. This increases their margins substantially. It's important to keep in mind. If the prices of gold and silver fall, I don't think they will. That's my prediction. They will obviously be able to produce less money, less cash flow. That's something to keep in mind. Here is something of their statement of operations. Sales I like to look at the 9 months out just because it gives a longer time horizon and less variables in the short term. About 1,500 more sales in September 2019, September 2020. Their net income per share, they actually, in the last 9 months, it decreased a good amount. This is just because we'll look at it in a second, but their net income just basically went down. I mean, obviously, actually, that makes sense. I'm looking at the basic with the discontinued operations just as a larger number. Their net income loss from 2019 to 2020, they lost about 30 million, because these are in billions. And we can go in to actually see what happened. Actually, no, we have to go to the income statement to see this. I'm sorry, this is the cash flow. Their net cash provided by used in operating activities. So they used, or am I right? Sorry, I'm getting confused. This is 3 million. This is about 2 times more than this. So net cash provided by used in operating activities. So they used a lot more money in doing what they had to do to generate that kind of cash flow, or the 100% increase in the cash flow. I might be getting that a little wrong. There's a lot of information here. We can go down to more financing. They paid back some debt too. You can see here. Always like to see that in a company, even if these interest rates are really low. Statement of cash. So total cash equivalents, restricted cash increased about $2 just so happen to be the same numbers. You know, I'm kind of confused about this. But regardless, if these are not right, then it increased to about 2 billion. Here we go down to the balance sheet. Current assets, you know, we're sitting at about 7.6 billion. And current liabilities, 2.7. They're like, their current ratio is great. And so they actually increased a little bit of current liabilities, but same thing with the current assets. It's about a 1-to-1 ratio. Their total assets about 48.5 and total liabilities 17. Very good ratio here. They're not leveraged at all, especially for kind of a company like this where you have these massive mines and you're always you know, you could get a lot of debt, so they're managing it well, also paying it back. You can see they sold one of the mines, so there's a plant property and mine development that you can see that reflected in here. Let's see what else we can look at. That's pretty much it. Here's you can see the debt they paid off here. Okay, that was really all I wanted to take a look at with you all as of right now. Oh, so they're actually up to almost 3% already. Wow. I mean, good news for the company. I don't see this as bad at all. If you look at like the 1 year, you know, do I think we're in completely over bought territory? I think it's a little extended, but again, they're on pace, they're on track for actual reporting, so they're doing very well. Would I buy more? I think if I had more money flowing in, more cash, I would, but the percentage of this company in my portfolio is already like 20-something%. Yeah, so I'm not really looking to add, but if I didn't have a full position, I think I would. My price levels, I'm at average price about 49.75, so I'm in it pretty low. Their report basically told me, you know, they're looking pretty healthy, they're on pace, they're doing good. Very large dividend increases. That reflects the price of gold. We'll go to GOLD real quick. GOLD, with the last 5 years, you know. Again, their GOLD, gold is just booming. As long as these prices sustain, the company will also be able to sell at these higher prices and have a better, or more cash flow and higher profiting, profit margin. Yeah, higher profit margin. Use my words. I know some people are here for like just relaxing and chilling and falling asleep, but I'm curious, what do you guys think?